What's happening, family? I hope everyone is having a blessed and profitable week so far. So today I will, try to make another attempt to record basically the recap of my Euro USD session that I had going on Monday and Tuesday. Basically did a recording yesterday, but somehow, I don't know what happened. When I ended the recording, I got a error message, right? And somehow the recording was corrupted. So I do apologize for the 1 day delay. But, without further ado, let's continue. So basically, if we, this was the screenshot that I posted and shared with you guys within the community from the 15-minute time frame, right? After, 1, 2, 3, 4 running positions hit my TP, right? So this was basically the 15-minute time frame view. But of course, let's start at the beginning with the first screenshot, right? Excuse me. So basically what I did was, let me get me my annotation tool here. So basically what I did, right, was from the 15-minute time frame here, I did a quick analysis, of course, and noticed that, price action was pretty efficient here. And after coming in here, most recent internal high got taken out and price closed above it, right? So at this point, price also came down, right? Not only to take out inducement, but also to apparently mitigate this wick here somehow, right? And then price again continued higher and eventually, broke this high and closed above it, as we can see. So at this point, right, I was looking at price action like this, right? Something like that. And that will be our lightning bolt when we look at structure from the 15-minute time frame major-wise, right? However, if we look at it, internal-wise, then we can definitely see something like this happening, right? So at this point, our internal liquidity inducement, most recent internal low got liquidated, right? And what I noticed here was basically a smart money trap, right? Because imagine how many traders saw this as a BOS, right? But practically this BOS was not confirmed because, there was no liquidity created and taken out, which then would have confirmed this low here first, right? So because that was not the case, I didn't see this as a break of structure. And, now this was our most recent internal low, as I showed you guys earlier, right? Our internal structure, lightning bolt like that. And now price took out inducement, but what do we have here, right? We have our major inducement. Remember, from practically, let's say this move, right? So I was more focusing on my major inducement instead of only focusing on internal inducement, right? And as I mentioned many times before, if you get a proper setup after internal inducement is liquidated, then by all means, take it, right? But these are more often than not 50-50 probability, while your major inducement is higher probability, right? So remember, internal inducement 50-50, internal engineered liquidity and major inducement higher probability, right? So at this point, I still was not into any positions, right? Because I just peeked at the chart in between my sessions. It was still before afternoon, right? So, but you know, I did notice this price action and, you know, looked at it together with my student at the time, which with who I had a session with. So I recognize this area as a smart money trap, right? Because again, this, and people saw this as in liquidity sitting above a potential order block, right? So they expect something like that, perhaps, right? But again, yes, internal inducement was liquidated. If you get any, you know, entry criteria here, candle-wise, because now structure-wise you have your confirmation, you could have done so, right? By either utilizing the same time frame or even go to the lower time frame and utilize your entry models from the lower time frame, 1 minute, 3 minute, either structure-wise or candle-wise, right? But in this case, as you can see, everyone who actually had entered here from this order block, right, got triggered, and price always will gave a reaction, right? Because that's to manipulate even more buyers. But again, to me, I personally would have waited until this here. So, and that's exactly what I did, right? So looking at the price action here, I basically set my alert here and went back to the session with my student. And not long after that, look, price actually took out liquidity here. And look, it closed way above it, right? So, you know, at this point, I went to the lower time frame, obviously, because now our major inducement from our higher time frame is liquidated, right? Let me go one back. I mean, you could have even had entered immediately from the 15-minute time frame, entry there, stop there, and then, you know, really up to you, TP here or here or here, right? So basically, if you are a bit aggressive, you can even go all the way up here, right? But, you know, it's not wrong to get out here because we don't know if price will go any higher, right? You know, that's why it's basically up to the trader itself, right? But, you know, more important than identifying your TP is obviously your entry, right? So let's go to the next screenshot. And yeah, now basically I noticed, right, major inducement is now liquidated, right, by this gray candle. And, you know, look where it's, you know, closed. Like it engulfs this black candle entirely, right? So what I did was I basically utilized the top of the black candle as my entry and then the bottom of the gray candle as my stop loss, right? So I was expecting, okay, if price now comes here before, you know, continuing higher, then my position will be triggered, right? So I placed my first sell limit order. And let's go to the next screenshot. Yeah, and as you can see, price indeed came back to basically mitigate that open price gap or fair value gap or imbalance, whatever you want to call it, right? You can call it Granddaddy's peach tea for all I matter. You know, the important thing is not how you call it, but, you know, you can actually identify the candles to make your entry from, right? So in this, you know, this position was already triggered, and immediately I placed my identical second 2-for-2 position, right? But this time I placed a stop order, right? So meaning if my entry is here, right, and price continues perhaps down, taps me out of my, right? So because we still have a huge unmitigated order flow here, right? Which I marked also here, right? So definitely to keep that in mind. And oh, this one too far. Oh man, all my drawings are gone. Sorry for that. So yeah, at this point, basically what I was trying to show you guys, if price goes higher, my second position will be triggered. And if, price continues down and mitigates this order flow first, and then give me a proper setup from a bullish inducement point, I will enter here, right? So I will accept my loss, wait patiently until I get any confirmation that price indeed mitigated this order flow and now is ready to continue higher, right? Then I will enter here and get even a better position in return, right? So basically you have to think a bit mechanically, like if this, then that, otherwise, so and so, right? If that makes sense. So at this point, I was confident enough. Why? Because our major inducement was liquidated and price does not have to necessarily mitigate anything. So in this case, it may go higher before coming back, right? So basically here price indeed went up. That's why I changed the color from gray to blue instead of overlapping buy position tools. I gave it basically another color because the position was identical. The only difference is one was the first one being a sell limit order, buy limit order, and the second one is a buy stop order, right? So at this point, second position did got triggered, and after I looked back a while later, I noticed another, because now this one was mitigated, this one is unmitigated, right? So I also noticed this inducement here, right? And price, already closed above most recent internal high here, indicating that this can function as my internal change of character, right? So I was basically waiting until price came to take out liquidity, perhaps even, mitigate this POI while triggering me and then continue higher, right? So just following my system. Then I get a alert from my broker, right? That my two positions here hit TP, but as you can see, the third one basically never got triggered. I mean, it came very close, right? But no, it did not happen. So then I marked this one, at some point as my inducement and engineered liquidity when price was somewhere about here when I looked, to perhaps that happen, but no. It is what it is, right? Sometimes you miss out positions, sometimes, you take a loss, and sometimes, hopefully, most often of the times, you, hit your TP and get out with profits. So in this case, TP was hit. And at this point, I removed that third position tool and, just to document basically a better view for my journal, right? And, now I went back to the 15-minute time frame because, look, I noticed also that, this high here. Oh, where is my, you know, you see? So basically, price did take out the high here of the order flow, and it closed above it, right? So then I indeed went to 15-minute time frame, right? Sometimes later, I noticed that price had now mitigate this extreme POI, right? And now it was, reacting to it because I noticed this wick and price closed way below, right? So basically not an efficient mitigation, so to say, because to me, for this being, really mitigated, price, has at least one candle close within your POI, right? But again, that's just how I approach the market. Yours can be totally different. I mean, nothing is right or wrong, right? You just have to find out those little details, nuances, and, practice them long enough so you can practically benefit from it, right? Because at the end of the day, again, we try to minimize the low probability entries and to, stay disciplined and only participate in potential high probability entries, right? So now, from this point, I basically noticed this. And then I went again back to the 3-minute time frame and noticed this pullback, right, after mitigating this one. So it had definitely my attention. And from the 3-minute, I even went down to the 1-minute, right? And eventually I noticed that, the candle on the 1-minute, I believe the 3-minute, also. So on the 3-minute, it actually did close, right, within the POI. And on the 1-minute, later on, what do we see, right? So practically, we saw this. Price came, took out your bullish internal inducement, and then went higher, right? But then what happened here at the top, right? I mean, it took out the most recent high here that actually mitigated your POI, right? And look at the next candle, right? The black candle totally engulfed the gray candle, right? So it had definitely my attention at this moment. And basically, this was also the screenshot that I believe I posted within the community, as in entry type 3, right? So I posted this and said, guys, if we get, a price back to the upside before breaking this low here, and after mitigating this area, price takes out this low, closes below it, and then gives us our inducement, then we can basically enter here after inducement is taken out, and then perhaps price also will mitigate something here, right, to create efficiency then at the top, right, because this one would then be efficient. This one would then be your first entry because inducement is taken out and your POI above it is mitigated. But, a mitigation of a POI is not always necessary. As long if you get, your entry criteria candle-wise from this point, you can definitely make an entry here. And then basically the same principle, what happens here on a larger scale, you can do also here. So before price breaks this low or before price breaks this low, instead of doing that, right, it has to come back and basically the same thing here. Instead of doing this, it will give a reaction after inducement is taken out. And then before breaking this low, comes back one more time to mitigate this extreme, and then continue lower and breaking this low. If that happens, I will then make my second entry here, right? So basically this idea I would execute, but only if price action gives me structure-wise the proper setup, right? And if we look at this then, I mean, at this point, it was everything basically happened as I thought it will, but this movement did not break this low, right? Because this movement did come back and mitigate this area, right? But then it did not break this low, neither created endorsement, something like this, right? So it did not do that. So at this point, I just, skipped the entry type 3 for the time being. And I was just patiently waiting what price action will do now, right? So let's go to the next screenshot. Yeah, so at this point later on, I got another alert that the high of the POI is now being liquidated, right? This one here, right? Remember, this was our most recent high, right? On which our POI was based on that black doji candle from the 50-minute time frame, right? So now, look, price came with a lot of strength to take out basically your range high, right? Structure high. And what happened then? Price kind of, where did all that momentum go? You have to ask yourself, right? So at this point, because I did earlier not get an entry type 3 here, I was now looking for entry model 2, basically, right? So what can we do before we make an entry here and even here, perhaps, right? This one being aggressive, this one being conservative, right? So again, we are basically following our plan, the concepts, right? In this case, this high got liquidated, so you have to wait until this low is now broken. And while doing so, it may create endorsement along the way before it breaks it or after it breaks it, right? So you have to be patient. And I believe I also posted this idea after entry type 3 did not work out structure-wise. I posted this entry model 2, right, as a potential setup then, because we are adapting on what price action is showing us. We don't anticipate, right? We react. So now let's have a look. Or yeah, so basically I would like to see an entry type 2 at this moment, like this. Price would break the structure here before any mitigation on the top, like it did earlier here, right? Like I showed you. And then along the way, create liquidity. So if I get this setup, this is entry model 2, then I will utilize that. Otherwise, if I get from this point on an entry type 3, right? Instead of it was here, if I get that one now here, before this low now breaks and price comes back, mitigates this area. After that mitigation, it creates endorsement, comes back, takes out endorsement, right? Then I will consider again making a scale in here, a bit aggressive, because you have to wait and be patient until you get candle-wise your entry criteria. If not, wait. It may perhaps even take out this high or mitigate the POI here, right? And then basically again, before breaking this low, if it gives a reaction, mitigates the extreme here of this move that took out liquidity here, right? I will again make an entry. So to me, I was either looking for entry model 2 or 3 in this case, right? So 2 has to break this low first before mitigating the extreme. And then along the way, while doing so before or after, create endorsement. And entry model 3 has to pull back and mitigate first before breaking this one. And then again, either after mitigating here along the way before or after taking out the low. It needs to create inducement, and then you have to wait for the liquidation of it, right? And why would these, entry models work very good here? Because it all happens on an extreme area, right? Let's say price would give me somewhere along the way, like this. Again, here I can definitely take an entry with full confidence. If it happens here, I rather be more cautious. Why? Because now it happens in the middle of movement. Not only that, right? But also because you have still liquidity here. Price may come and tap you in, give a reaction, come back, right? Take out this engineered liquidity here and then continue lower, right? So these entry types work like more higher probability at an extreme area. And yes, you can definitely utilize those also here, but here, more often than not, would be 50-50 probability. Why? Because here in the middle of a movement, price leaves a lot of liquidity while coming down. So it may or may not first take out all the liquidity from the left and then continue down, right? And here at the top, it has no reason to go any higher because it all happened at a extreme level, right? Not only that, but also it happened already on your higher time frame. Higher time frame structure, major structure, right? So basically, if you get your entry model at a higher time frame structure, major structure, you go to the 3-minute time frame and then basically look for your entry type models on the lower time frames, either structure wise, or if you already identify them structure wise, let's say price, was here at the time being, you have then you can, enter definitely from this POI here, like that, right? And then you have a higher chance or probability that, price will hit your TP. Why? It has no reason to go higher because all the liquidity, all the mitigation here already happened, both on your higher time frame major structure and lower time frame, structure wise. And then you just wait and look for an entry candle wise, but only after confirmation, right? Okay, I hope that makes sense. So yeah, what I then did, because, I thought if now this major liquidity recent high structure is taken out and either, I get one of these entries, I was a bit aggressive. So I waited until this candle, right, was about to close below the gray candle that basically topped out, that took out liquidity there, right? So at this point, I was basically, wanting to take a calculated risk position, place my sell limit here, stop there. And then, as you can see, my position did got triggered. And at this point, price came back one more time. Why? Because remember what I told you guys earlier about the entry before breaking this low here, right? So you don't have to wait until inducement is created like this, price comes back, and then you make your entry here and then like that. You can definitely do that if, structure-wise, you get, again, this setup later on. But because what you are waiting for, remember, already happened on your major structure, you can basically now, again, go with the same concept. This was your move. Here, price pushed lower, but never took out this low. It came back to one more time mitigate this area. And then we expect that, price may do something like this, eventually break this low, and then do like that, right? So that's why at this point, I actually, again, like I did here, placed a 2 for 2 position, right? For the same reason, if price continues, higher, my first position and then I will basically look for the same again after I've been stopped out, right? But in this case, I just place my stop order from here, and then again, stop there, identical order, again, a 2 for 2, right? So I just waited, and at this point, it was looking good. Now I had somehow of a confirmation that indeed price only came up to either mitigate this candle or liquidated it, right? And I believe here my second short identical 2 for 2 position got triggered. And that's why I changed again the color from green to blue. Gray, to blue. And at this point, immediately I again placed a sell limit order now based on this area, right? Because again, the same pattern. Before price breaks this like that, right? I am expecting that price gives a reaction, comes perhaps back to again mitigate this area before continuing down, right? So that's why, just like I did here with the third position that I missed, right? I basically did the same, but then the opposite for sell, right? So I basically utilized this order flow here as my POI, but left my stop at the same, and then just place my sell limit here. And again, why can I do it with confidence here? Because it's at an extreme area. If this happened again somewhere along the line here, like this perhaps, right? I would not consider to take a position that confident here. Why? Again, it's in the middle of a movement and there is a lot of liquidity above. So price may tap me in, give a reaction, and then come higher to take out perhaps liquidity here, perhaps even mitigate this entire order flow here, and then continue down, right? Because then it has every reason to do. Even so, if I enter here, I get stopped out. I just patiently wait until either this engineered liquidity or this order flow is being mitigated. And if I then get again candle-wise my entries, I will do so either from here or here. If I do not get any candle-wise entry criteria here, I will rather wait for my order flow mitigation, right? Because in this case, this is my POI that I expect to be mitigated before continuing down and breaking this low, right? Make sense? Oh, I'm just talking to myself. There is obviously no one who can give a reaction. And, so yeah, at this point, I was basically expecting this to happen, right? And now I can indeed enter with confidence more. Again, why? It happens at an extreme area, and both my higher time frame, major structure, and lower time frame, structure-wise, everything is already confirmed. I'm just looking candle-wise for my entries. So let's continue. Yeah, this was basically the pattern that I was looking for, right? Either it comes back, triggers me in, or if a reaction creates inducement, comes back. But again, right, it all has to happen before this low gets taken out, and then comes back, takes out the inducement, and then triggers me, right? So again, we come up with a couple of scenarios. Well, obviously, this move never happened because, at that time, evidently the momentum was too strong. So yeah, missed entry there, but nevertheless, I already had 2 positions running. And now, look, price eventually did take out this low. That also confirmed my change of character. And eventually, what did it do now? It left inducement here, right? Remember when I said earlier, either scenario 1 or 2? Well, this is basically scenario 2. Instead of, from here, coming back to mitigate it, I also marked it up in this one, right? So instead of doing this, price indeed did not mitigate that POI, continued lower, right? Took out this low. While doing so, it created inducement here. So at this point, I again set my alerts here, waited for price to come back. If I get candle-wise my entry here, I will do so, right? Otherwise, I will again do it from this area, right? This one, I again can take a, calculated risk like this, because if I get entered after inducement is taken out and price continues lower, then I have a additional position. However, if price takes me out, comes to mitigate this POI, I will consider to make a re-entry here, right? So in this case, I am confident enough, again, to take a calculated risk position here, if I get structure-wise my setup, right, from price action. Why? Again, extreme, higher time frame, everything. I don't have to repeat myself. So very important to put everything into concept like that. And, at this point, yeah, so basically I already drew out what I would like to see, also shared this one with you guys, and it was just a waiting game, right? Don't be impatient. Either price comes, takes out this inducement here, and if not, I expect that price gives me somewhere here inducement, so I can then perhaps, look for an entry, because then this would act as my order flow, right? So you don't have to wait then until price eventually comes here and then, right? So you may miss your entry, right? Either again here or like that. Right? Before, again, breaking this low. Okay? So, again, a couple of scenarios that we, have on which we can basically put up our trading plan or setup, right? So, at this point, I believe I missed one. Yeah, so this was the idea, right? And then eventually I noticed that there was new inducement. So basically it moved from here to here. This being our most recent internal high becomes our inducement, and our most recent or first pullback becomes our engineered liquidity, right? So basically this becomes now invalid or a smart money trap. Why? Because imagine, again, what I showed you guys earlier, where was it? Oh yeah, here, right? With those buys that everyone who saw this and this as a BOS and noticed the liquidity here got in here, right? Eventually they were liquidated because of the major inducement, right? But now, instead of having a major inducement, right? Because this pullback was not liquidated. This pullback was not liquidated. This pullback is now inducement. If that one gets liquidated, that will confirm our low here, right? So basically here, the same. Imagine how many traders saw this as a BOS. Where did the strength came from that broke, that BOS, the zone that broke structure being this one, right? So either traders who are waiting to enter from here will presumably not tapped in if price takes out liquidity, gives us the proper signals to sell, right? So they would not be triggered. Or, price comes, triggers them in, gives a reaction, continues higher, stops everyone out, and liquidates this engineered liquidity, and perhaps even comes all the way to mitigate this one. So either after liquidating the engineered liquidity or mitigating our extreme POI from the 3 minute. Either way, if you get your setup here, then definitely you can sell. Otherwise, wait. If you get your setup here, then you can sell here, right? So if we get a reaction from, oh, let me clean it up a bit. Yeah, so if price takes out inducement, gives you no signal to sell after that, right? Just patiently wait, because now you know, okay, price may continue higher to what? Induce or manipulate traders in sells here, right? Because they focus on this BOS, and this being the zone that broke structure, right? And this being perhaps their extreme zone. So the aggressive traders, right, who are planning to enter from here, have lower probability than the traders who are willing to wait patiently and then look for here. Because, yeah, I mean, they probably would not notice this engineered liquidity, but nevertheless, in this case, their extreme zone could work in their favor, right? So we expect a reaction from this area. Why? Because, again, imagine how many sellers are selling here. So it's normal. But we also expect eventually that the price will come back to take everyone out. So why do I mention this? If we get any reaction from this area, just be patient. Don't enter. You know it's a smart money trap. Why? Because yes, it took out inducement, but it also triggered aggressive early sellers here that was focusing on zone that broke structure, right? But you know there's engineered liquidity here, right? So, and you know if you get a reaction from this area, evidently they will be, you know, stopped out because, you know, the market needs liquidity to actually move, right? So yeah, basically that was how I looked at the price action at this point, right? And also there was this unmitigated order flow, while this one was basically mitigated, right? By this move. And I mean, this inducement basically kissed your order flow. There was not actual mitigation. Again, price has to close within your order flow. Oh, very ugly candle. Like that, right? To be efficient or, you know, a valid mitigation. So now that's why I waited until price comes and takes out this inducement. I will simply wait for any kind of reaction, right? So let's have a look. Boom. And then again, I got my alert triggered, but I looked at, you know, the candles. At this point, price did close or was about to close above it, right? And later on, look, I did not get any signal here, right? But now, look what happens, right? So price took out inducement, again, gave a reaction. Before breaking this low, it came back here. And now, again, was basically giving a reaction after, you know, taking out this high that actually took out your internal inducement, right? So what I did was, yes, as you can guess, I practically used this gray candle, right, as my entry, and then stop above the black candle here, right? Why? Again, because I was expecting this move to happen, right? And the black candle eventually took out the liquidity to the left, right? So it had no reason to go any higher. And, you know, it took out this low, broke below it, right? So before continuing down and breaking or taking out this low, I was practically looking for this, make my entry, right? Practically the same concept as I did here, right? But now it was obviously, you know, a bit more risky. Why? Again, it happened within a middle of movement, right? And also this may, eventually become my endorsement, major endorsement, right? So yes, price may tap me in and then continue down, but that will be internal structure-wise, because major structure-wise, our major endorsement, right? So price may trigger me, come back, take out this low, and then come back high, take out this endorsement, and again continue lower. So with that in mind, I was willing to take a calculated risk position. Again, why risky? It happens in the middle of a movement. This one is more safer because it's extreme. Higher time frame, major structure, and lower time frame, structure-wise, candle-wise, everything. And eventually, this position got triggered, as you can see, right? And then price started to give a reaction. And yeah, eventually, boom, I got stopped out. Why? Because we still have engineered liquidity. One, remember, these internal engineered liquidities and, major endorsement holds more value, higher probability, while this one is 50-50, and especially within the middle of a move. And like I mentioned, right, this was basically our impulsive move, and price was now retracing. We don't know if it will stop here or give a reaction. Look, and I believe it is very close at this point in triggering those early sellers aggressively from this smart money trap, right? So I think that, looking at this point, price stopping me out, that indeed that will happen. So price will tap early aggressive sellers from this, give a reaction, right? And then stop them out. While doing so, perhaps even take out engineered liquidity, and then I will look for potential sells, right? So at this point, I waited a bit more. And yeah, now we can definitely see that all those sellers, right, who had entered here are definitely now triggered, right? And looking at the time, it was almost, 11 p.m. also. So I basically, was no longer behind the charts until I got an alert, right, at 1 a.m. in the morning or night, better say, right? And look at this. Exactly the reason why I avoided placing a sell here, right? So as you can see, price came, triggered, gave a reaction, but eventually it came. And at this point, I was poked by my wife in the middle of the night. Hey man, your phone is vibrating, making weird sounds, everything. And I therefore got up, ran to my computer to make a screenshot. Because again, right, at this point, it was almost like 11 p.m. I basically set my alert here in case price comes, and if it goes down now, then, I will just take it, one loss, two running positions, right? However, I did get my alert at almost 1 a.m. in the night, after, everyone was stopped out and engineered liquidity now being liquidated, right? And then a few minutes later, 43 and 48. Yeah, 5 minutes later, I didn't want it, to spend too much time behind the charts because one eye was still closed because I was asleep, right? So what I basically did was, okay, if price leaves me now, then, it is what it is. But instead of, leaving it for what it is, I basically put an identical order of this position here. So basically 3 identical positions, right? But now I had the reason that price may come back, to mitigate this POI here. Remember, because now our order flow was definitely mitigated, right? And this POI is basically a refined extreme of that bigger order flow, if that makes sense, right? So basically, now inducement was taken out, I was stopped out, everyone who had sold here also got stopped out, engineered liquidity was now being liquidated, and yeah, basically I placed my sell limit order here, identical to this, and went back to bed, right? And then in the middle of the night, like 3 a.m. again, my phone made weird noises, and my wife again made woke me up, and then because now my position was triggered. So again, I ran to my PC and noticed, okay, price is triggered. I immediately again made a screenshot for to document my journal, right? And at this point, before I went back to bed, I mean, yeah, this time I did take a bit longer of time. Why? Because of this, right? It happens again at an extreme. This was my low. If price, however, before taking out this low gives a reaction something like this into this candle, right? I will again look for a entry and basically utilize again a 2 for 2 position. So at this point, I definitely recognized that pattern, right? So again, our low, price came, not because buyers were stepping in. After the Asian session open, price came to mitigate this inefficiency area, right? Open price gap, imbalance, whatever you want to call it. And then it gave a reaction. And at this point, if you look very closely, it also created equal highs, right? So in my mind, before, continuing down, price should take out that equal high and then continue down, right? And in this case, again, I was more confident. Why? Because it happens at an extreme. Major, everything is already confirmed. Lower time frame, structure-wise also. I'm just looking for a candle-wise entry, right? So I placed my identical second position. Again, sell limit, 2 for 2. And as you can guess, boom. The next wick basically triggered my position. And, from this point on, I again went back to bed. The next day, I woke up, took a screenshot, but I didn't, not paste it in my browser. So during my session, which started at 9 a.m., my second session at 10 a.m., price came around this level here, where I got my alert that price has reached a point in structure where I will move my stop loss to break even, right? But I immediately noticed one missed opportunity, two missed opportunities. I mean, this was basically after I went back to bed, and this was basically immediately after, I started my first session, right? So yeah, I mean, could have been great entries. And let me show you guys why. Because here, price came back, took it out this high, right? That mitigated this POI. And then it gave here inducement, right? So basically you didn't had to enter immediately like this here. But after this high was taken out, you could have basically wait until candle takes out this low that happened here. And then, you could have basically based your entry here with either stop here or again here. And that would have been also a more secure or conservative way of making an entry with a bit more confirmation instead of, entering very risky here. But again, you could have done so. Why? Extreme, right? And the same thing basically happened here, right? So price came after taking out this low, right? It came back And look what it did. It wicked through, took out liquidity, but price closed below it, right? Not only that, the gray candle that took out the liquidity here, look at the next black candle, right? I mean, it totally engulfed. It closed below that gray candle, but also the next candles took out this low, right? So what you basically could have done at that point, entry here, and then stop either here or here. Again, let me, this low got taken out. So this candle, entry here, and then stop there, right? And then again, TP here. So yeah, that could have also be an entry, but I missed it. It is what it is, right? So at this point, I did had a bit of time. So I did my, I did a quick, markup, and noticed that this was my inducement now, right? And it left a POI here. And this was my unmitigated order flow. And this POI, again, like I showed you here, is a refined order flow, basically my POI, extreme one, right? Because this order flow was already mitigated by this move. And my current order flow was not mitigated, right? Therefore, inducement identified, POI identified. If I get any reaction from the candles here, candle-wise, I will take my entry here. If not, I will wait until this POI, and then look again, candle-wise, for that entry, right? So at this point, again, it was basically a waiting game. And yeah, then I got an alert that basically inducement was liquidated at this point, but I did not, see any signals candle-wise to make an entry already here. So I basically waited, and after a time, because again I was in between my sessions, right? Here, 12:35. So I was not able to monitor price action, but later, 14:56, I noticed definitely something interesting, right? Because where our inducement was taken out here. Let me try to draw it out like that, right? So again, it took out our internal inducement, and then it created our major inducement here, right? So again, 50-50 probability it would have been if you still had entered here, right? Again, why? It's in the middle of movement, right? Extreme is always higher probability. But nevertheless, price came, took out inducement, and then what happened here? Before breaking this low, it came back. It mitigated here something before continuing down. So again, missed opportunity, right? It even, I didn't notice, it even took out this high, right? So you could basically wait or place your entry immediately like that. And then, it's up to you, of course, if you put your stop loss here or, I don't know. It could have been a losing position. But yeah, I mean, it also could have been a winning position, right? But yeah, shoulda, coulda, woulda, doesn't matter. At this point, again, before price breaking this, I was now focusing on this, right? Because now this liquidity was taken out. It basically took out major inducement. So at this point, right, price has no reason to go higher, but only to mitigate this area here, just like it did here at your extreme. But again, because now it's in the middle of a movement, we are a bit more cautious, right? So yeah, price attempted to go higher, but instead of mitigating this POI, what happened here? It instead created inducement. right? And now broke this low here. So at this point, I was expecting a move like this, or, again, mitigation, and then a move to the downside, right? So either scenario 1 or 2. However, boom, I believe this was the time when I believe Powell came out with news, and then boom. I mean, the dollar literally tanked for a while, because here it hit my TP, right? So basically 2 times 15, 2 times 15, right? And obviously 2 times 20 of my earlier identical 2-for-2 buy positions. However, I then went to the higher time frame later and looked, and look, boom, right? So not only price took out my major bullish inducement, remember, where it took out here our inducement, this now became our inducement, which, conveniently set above our bullish unmitigated order flow, right? And price came, boom, like in a matter of minutes, I believe it was, to basically to mitigate that area, right? So yeah, again, I could have targeted this here or even this here, but it should not matter. Shoulda, coulda, woulda. I basically remember that inducement that I had marked earlier. Basically, that was my target. So either way, I got out with 99R profit, right? Because I had 1R loss here, remember? So 2 times 20, 40, and then 30, 70, another 30 is 100 minus 1. Yeah, so basically 1 loss. Oh, if I hadn't that one, it would be a perfect strike or a match. I don't know what the correct term is, but basically, yeah, that's my recap of my trading session with EURUSD from last Monday and Tuesday, right? So yeah, I hope you guys enjoyed the recap of this session, and if you like the video, please leave a like, and you may share it with other traders who are interested in learning these concepts, how to recognize them, identify them, and utilize them. So thanks for watching, family, and have a great day, and stay healthy, and until the next time, one love.